So I have been watching a lot of things going on, specifically in Twitter, everything around the real estate market. And there have been five topics that have really been showing out in October. So I want to cut straight to the point as a local real estate expert here in the greater Seattle area and discuss these with you. So after we go through them, you guys are more than welcome to ask me any questions, leave comments, concerns down in the comments, and I will do my best to get back to you on any and all of these. So let's get rocking and rolling. All right. So the very first thing that has been trending on Twitter is talk about how foreclosures and repossessions are rising. So foreclosure filings, they are up just about 17% year over year, and lender repossessions more than 30%. I mean, we've had really, really quiet years, especially since the pandemic. And so we're finally starting to see some of that distressed activity creep itself back into the real estate market. So, why does that matter? Well, you need to know, first of all, that we are not heading back to a 2008. All right. This is more of I would call it like a normalization after really kind of an artificial low. I mean, during the pandemic, lenders, they all held off on foreclosures, and many homeowners had equity cushions from just all of the rapid appreciation that we gained during that time. I mean, homes in Washington State, grew over 40% in just like 5 years. That's pretty impressive. But now some owners who have bought at peak prices, what they did was they stretched their budgets. They bought under these high interest rates, and they're starting to feel the pressure. So real estate is a really good investment if you buy a property that you can afford. And while a 2 or 3% interest rate is fantastic, what we saw some folks that bought $100,000 over asking because they had a low rate, and now they're just feeling that pressure, right? They bought at a monthly payment that they couldn't really keep up with. Those are the folks that are in trouble. I mean, the majority of homes here are paid off. People have just a ton of equity. So, it's not anything crazy. I don't expect to see a big surge of REOs or a lot of properties you can get for 50 cents on the dollar. And even more so, it's important to look at where we're at here locally. So right here in the South Sound, looking at like Tacoma, Bonney Lake, Pierce County, I am seeing more notices of defaults pop up, but the majority of these homes still have a ton of equity. So even though people are falling behind, the economy's been harder. Instead of foreclosing, many sellers that find themselves stretched, they can just list their house. They can sell and walk away clean. So if you see this, foreclosures are rising, I want to encourage you to take it within the proper context, right? This is not a crash. It's really just the market rebalancing and some people kind of coming back into what is just more normal. All right. The second trend on Twitter I'm seeing is buyers and sellers are both stuck. Buyers are frustrated with the high rates. Sellers are reluctant to give up their 3% mortgage. The result, fewer homes are listed, fewer sales closed, and there's this weird sense of like gridlock in the market across the country. This is the lock-in effect, and this keeps supply tight, even though demand does exist. What we're seeing is these sellers, they don't want to trade their low payment for today's rates, and buyers can't find the right home at the prices they can afford at today's rate. Okay, so the way this is playing all over the Seattle and Tacoma corridor is if you're a seller who doesn't really need to move, you're just sitting tight. But if you're a buyer ready to take advantage of less competition, this lull could actually work for you. because you're not really bidding against like 15 people like you did just, last couple of years. What I am seeing is really we have this reduced inventory and we have a reduced demand. Now they're both kind of even. So it's not as dramatic as you would think, because what you're seeing is anyone who might be selling a house with a 2 to 3% interest rate is highly motivated, right? They have got to move. They need to be wherever they're going. They're dealing with a birth that is outpacing the size of their house. They're going through a divorce. They're having to relocate for work. Kids are graduating and going to college. You're seeing this more motivated seller pool versus a few years ago when it was just, let me see what I can get out of it. So for the buyers who are also motivated, meaning they're willing to buy at a 6-7% interest rate, while the market is a little bit lower here in the Seattle Tacoma area, when you do have two folks that want to enter into a contract, both of them have really massive motivation. It's not just one-sided. So this is actually probably one of my favorite markets that I've seen in the last few years. Number 3, the best window to buy this fall. I don't know. It's just been since I've gotten to real estate. I've always been told that October 12th through 18th is the best time to buy a house. Quite interesting here, but Realtor.com and other analysts are calling mid-October like the best week for home buyers. Historically, this is where we see listings peak while buyer competition kind of dips. This creates sort of a temporary advantage for those who are ready to act. So, why does this really matter? Well, more inventory with fewer competing offers. This is going to give us on the buyer side a little more negotiating power. Not to mention, if you add in the fact that we got a little small dip in rates, math, kind of suddenly works better for buyers who've been kind of waiting for that break. Here in Tacoma, Puyallup, Bonney Lake, Seattle, we're already seeing sellers adjust prices and increase concessions. I was literally just looking for a buyer a few minutes ago, and in the seller remarks, they said that the sellers are already willing to give a $5,000 buyer concession. This is before any negotiations at all. So if you're looking to, buy before the end of the year, the next couple of weeks could be the best shot to lock in something kind of without those bidding wars. I also love that right now, if you do buy in October, you could really technically, if you push it, you could be in that new house for Thanksgiving and, definitely be able to celebrate it by Christmas. I do love this time of year. I love seeing people get really motivated to kind of make that final push before the holidays get here. So you do tend to see sellers a little more motivated and buyers a little more motivated. I've always heard this thing about, we don't want to sell in the winter. Look, selling in the fall and the winter is awesome. I've almost exclusively, aside from this last move, always moved in the fall or the winter. And here's why. One, you actually over time tend to have people kind of remove their homes from the market. But for me as a seller specifically, there are no tire kickers. Okay. Look, if you are out here in Seattle weather in, November, February, looking at houses in the rain and the cold, you're pretty dang motivated. So I've never had to be in and out of my home as much. It's always been less of a headache to sell at that point. And I've not really seen a trend of, property values decrease or anything along those lines. So if you are looking at selling, I do not hate this as a time. Hey, I got a hi here from Miss Linda Bishop from Texas. She was born in Tacoma, Washington. That's very cool. I'm sure the weather down in Texas is probably slightly different, but I'm glad to have you on the live stream. All right, number 4. Obviously, mortgage rates are always something that is trending. So people are talking a lot on X right now about mortgage rates. Slight dip, but of course, volatile. So Rates have dipped slightly after months of some steady pressure. Some lenders are quoting in the mid sixes. Heck, we even had somebody at one point get a 5.75, but the volatility remains. We've got all these upcoming Fed meetings and inflation data that's likely to swing some rates again. You got to remember, when confidence is removed from the economy, people pull money out of the 10-year. That causes rates to go down. As they get more confident, they put money back in it, kind of causes it to go up. So, why does this matter to you? Well, even a quarter point change in rates can make a huge difference in affordability. Buyers who stay alert and ready to react when rates ease honestly can save you hundreds of dollars a month. Now, locally, whether you live here, whether you're watching this on YouTube and you're looking at relocating, I tell my buyers all the time, like, look, there's no point in chasing perfection with rates. If you could time markets, you'd be a genius. But the reality is that time in the market is a hell of a lot better than trying to time the market. So focus on getting the right home in the right neighborhood. Do this at a price that you can afford now. Okay? That you can afford now. Then, if rates decrease, you get all these goobers out there talking about, date the rate, marry the house, whatever that thing was. Absolutely ludicrous, because they talked people into buying properties by telling them that they could refinance here as soon as rates dropped in 6 months. Guess what? That crap never happened. Now you got people that are living in homes that are too damn expensive because somebody wanted to make a quick buck. You should be ashamed if you are a real estate agent that ever told that to someone buying a house. I want you to buy a house that makes sense for you in a neighborhood that fits your lifestyle at a price you can afford right now. And if rates happen to decrease, you can always refinance. Waiting too long usually costs a lot more than acting strategically. See, if you can get into the property now and rates do possibly decrease, you can always refinance. Now, however, if you don't get into the market and then rates have some form of a dramatic decrease, now you're going to see millions of buyers come to the market, and then you're going to see values come back up, and now you're going to be competing again. The decrease in rates only helps the folks who are already in the market. But under no circumstances do you buy a property that you cannot afford in hopes of refinancing one day. All right, that's the end of that rant. So, number 5, the Zillow and Redfin antitrust suit. Now, this one is going a little bit more on in the real estate space versus, consumers, people relocating, looking at it. But the FTC in several states are suing Zillow and Redfin, claiming they made a deal that limited competition for rental listings and advertising. It's a big move that could reshape how real estate platforms operate. Now, why in the world does this matter? Well, if regulators crack down on exclusivity deals, it could open the playing field up. More transparency for renters, or potentially lower marketing costs for agents who do property management and landlords. Out here, for agents in our area, this could affect where and how rental listings are displayed online. And for renters or these small landlords around Tacoma or Seattle, it could mean more visibility and more choice. It's something that I'm always keeping an eye on because it's about fairness and access in our industry. And you know what? The other portion I really don't like is how many people pop onto these portals and they look for a rental, they make a phone call, and it turns out this thing has been rented for 3 months. And then what they're doing is they're taking your data and they're sending it off to an agent. They're sending it off to a property management company, trying to fill something else out. Look, there should be fairness in the marketplace. People should be able to market their properties. If you're a mom and pop landlord, you're somebody that rents out a house and you are providing housing, you should have fairness across the marketplace. Because without you, mom and pop landlords, there is no place for folks to live. I don't care if the county governments want to build giant affordable housing high rises and everybody is stuck living on public transportation. And, let's be honest, that's pushing an agenda. You guys are the ones who are really making it happen. So I'll be keeping an eye on this one a lot because I want to see what happens and how this affects you guys. So, man, all right, bottom line. Right now, the market is shifting quite a lot of ways right now. We're seeing some wild swings, but we're seeing some kind of movement that does create opportunities if you know where to look. My advice, I heard a wise man once tell me the news is always selling you something. Usually it's fear. Don't get lost in the headlines. Stay focused on your goals and let this data work for you. And if you want to talk to me, if you're looking to make a move, if you just want to grab a cup of coffee, if you're local, my personal cell phone is 253-225-2395. I would love to get an opportunity to meet you and to help you out. Thank you for jumping on this stream. We'll check in again here shortly and see what is new and trending on Twitter in the world of real estate.